Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you as always for coming on.
Thank you for having me.
Well, right now we're seeing historic volatility in major currencies, including the British pound, which is almost at parity with the U.S. dollar, and U.S. stocks are down again, all three main indices, but this time the Dow by the most, over 1% on Monday. What's the story in the global markets?
Yes, in the regular trading day of Monday, S&P 500 fell about 1%, which is closed at one of the lowest levels this year. And also Dow and NASDAQ composite fell 1.1% and 0.6% respectively. If you look at the sector-wise, 10 out of 11 S&P sectors declined, led by the real estate and energy and utilities. Clearly, due to the benchmark 10-year U.S. yield surged to the highest level in over a decade to around 3.9%, and continuously the relentless dollar rally is happening, causing global uncertainties and global volatilities. Clearly, the Fed's moved to saying that they'll continue to tighten further. And the comments coming out from the Boston Fed President Susan Collins saying that they need to bring down inflation and they need to raise interest rate even further, and maybe that causing a rise of jobless rates. But nevertheless, most of these the Fed chairs are saying that recession is not inevitable, meaning that there's a possibility that the economy might be showing recovery next year with the inflation coming down. If you look at the overall market, futures market, we are seeing a very sharp recovery, and S&P 500 is showing about 1.3% rise, and NASDAQ futures is also showing 1.46%. And also we are seeing the dollar stabilizing somewhat. Pound is also stabilizing. So I guess we are seeing some kind of breather after such a huge volatility we saw in the last three volatile sessions.
Right, and speaking of volatility, Korean stocks up and down today, looking like it was going to be another loss, but eking out a slight gain right at the end of the session. A bit of a mix among the big names. Samsung Electronics was higher. The currency at one point was approaching 14.30 to the dollar, but the rate actually fell in the end. Tell us about the domestic market.
Yes, I think that the major buying was coming from the domestic institutions towards the end of the hour. We saw local institutions buying 245.8 billion won worth of KOSPI and buying about 130 billion won worth of KOSDAQ. And with that, we did see the KOSPI rising after actually falling more than 1% and breaking the 2,200 territories. It did recover and ended at 0.3% rise, ending at 2,223.86. KOSDAQ also showed recovery to 698, did not be able to break above 700, but nevertheless, it did recover by about 0.83%. Sector-wise, we did see quite a bit of strong move in terms of the leisure sector, including casinos, airlines, etc. If you look at the overall market condition, we continue to see huge volatilities, but we are seeing some improvement in terms of the consumer sentiment, that the numbers are showing a somewhat slight rise. But nevertheless, we continue to worry about the rate of rise that we're seeing in a 10-year government bond rate. Yesterday, we did see that number going up to as high as 4.3%. Which means is well above U.S. rates, and that means is that the heavy burden to the domestic retail borrowers. We are seeing small and medium-sized companies as well as very low-income bracket individuals are suffering from the high interest rate environment, and that will cause continued uncertainties, and that also causing quite a bit of a problem for Korean economic recovery in the domestic consumption side. I think that we need a much more aggressive measures by the domestic government, trying to subsidize some of the interest rate or provide some kind of the fiscal the increases to support these low-end bracket individuals. But in any case, we are still seeing quite strong export numbers. Of course, the economic growth rate is uncertain, but Korea's competitiveness in the various developed industries seems to be quite intact for the time being.
Right. Well, speaking of the economic growth rate and all these calls for recessions ahead, the OECD is now saying the global economy next year will grow 2.2%. That's a decline of its previous forecast of it's a decline of 0.6%. As for Korea, it sees growth momentum slowing down. What do you see in this report from the OECD, Mr. Yu?
Yes, I think clearly we are seeing quite a bit of an adjustment due to globally much higher interest rate environment. Of course, the main reason for that before that is because of the Russia-Ukraine war causing quite a bit of inflation pressure worldwide and causing interest rate to be much higher environment. And obviously that is causing a growth rate to slow down much more aggressively than previously predicted. So if you look at the outlook projection for the global growth rate, for this year is at modest of 3%, but it is expected to further fall to 2.2% growth rate in 2023. That represents about $2.8 trillion worth of global output going down. I think that continuously the war uncertainty causing energy prices to be remaining high, and the COVID-19 pandemic affecting China, and various economies showing much tighter monetary policy is causing all that uncertainties. But if you look at the Korea's overall growth rate itself, yes, it is expected to slow down, but nevertheless, it's a quite reasonable growth rate at 2.8% growth rate in 2022 and 2.2% growth rate in 2023. All in all, yes, it's a slowdown, but nevertheless, we think that the condition-wise, we're not going to see a major recession happening to Korean economy or, I guess, the global economy per se. It's going to be much slower growth rate environment, which we had experienced that well before the COVID-19 era. So we think that we got to look at the overall conditions and how that affects the earnings of the corporations. We think that it's not going to be a severe case of we saw in 2000 crash of the dot-com bubble or the 2008 crash of the U.S. Financial crisis kind of worries. For the time being, yes, the volatility is there, but if the Fed decides to not raise interest rate as much, then things will recover quite quickly. So we'll have to watch and see how inflation of U.S. and how the Fed does over the next several months.
Right. Well, that's somewhat reassuring, Mr. Yu. We'll have to leave it there for today, though. Thank you, as always, for coming on the program. We always appreciate your insights.
Thank you very much.